over. Hey, Andy. Hey, Steve. How's it going?
All right, thank you, Scott. Hello, Andy. Hey, everybody.
Hey, Scott. Hey, Steve. Hi, everybody.
All right, welcome to the Tuesday webinar, Trade of the Week, known as. Um, we'll go about 45 minutes today. I got a few things to talk about, but we'll get through the necessary slides first, as I think some of the more seasoned, grizzled audience members slowly file in, knowing that we're going through this here. So the first slide is a reminder that we're a software as a subscription company. That's all we are. We're not a financial service. We're not a financial advisor or a broker. So we therefore have no official financial advice to give, and therefore anything you see or hear should not be construed as such. So we've got a 17-year-old product. Andy and I have been around since the beginning, and we've seen a lot of changes come and go, and it's not really something that's easily learned in a day or a week, or sometimes even a simple month. But we try to make it as easy as possible to get as much information as you want to get out of this product. There's no one right way to use this product, just like there's no one right way to trade the market. Everybody has a different focus, and so your job is to kind of find out what focus and time frame and method you want to use, and then use trade ideas to hone in and whittle down to find those types of setups, and everything else becomes noise in that respect. So in order to help you do that, we've got a lot of different options for you. We have the live trading room, which Barry's involved in, and it's Monday through Friday. It's a free room. I know there are other rooms out there that people pay for. They're probably not getting as much good content from the moderator as you'd be getting from Barry. But again, it's not just for subscribers to trade ideas. It is a free room for anybody to come in and kick the tires and see if this is something they want to invest in or take a look at. And of course, Barry reminds us to send people in there to support sometimes if there's no other webinars going on. He'll try and do his best to demonstrate for you if you need a question answered in real time. It's much better than trying to use the phones. And then we have our afternoon webinars, which we'll talk about features and things like that, market-related topics, just like we're going to do today. And then daily support sessions, that little one at the bottom there. Notice it says 12 p.m. Eastern daily. What that means now is Monday through Friday, our new educational live format is going to be consistent. It's a simple YouTube link, a live streaming link, so there's no more registrations or 1, 2, 3 hops that you have to go through to get into the room. You can watch it anywhere on your mobile tablet if you're sitting at the doctor even. So it's a much less what am I trying to say? It's a much easier way to sign up and watch these new formats, and they are consistently at noon Eastern, Monday through Friday. We go for about an hour or so. We'll talk about whatever you guys do want to talk about during that time. And there's our daily support sessions. We also have, for those who are new and want to have a link to the Trade Ideas University, we have canned all of those, meaning they're evergreen, they're recorded versions now, and you can get access to our old format, which is about 4 different videos, which we call Trade Ideas University. So that takes us through the slides and brings us to the reminder, the theme of the world that we live in, and we'll continue to even morph more into the man and machine, the human and machine living together symbiotically. There's really no one way to look at a machine and turn our back on it and expect us to make money in the case of the financial markets here or anything else. It requires an effort. I've used the oncology example before, where oncologists were blown away at how artificial intelligence gave back to them specific DNA, individual suggested treatments for individual type of cancers, and those oncologists were absolutely blown away that an AI could come up with something, or a list of ideas, let's call it, a curated list of concepts and ideas that the oncologist might want to try and treat the patient with. And a lot of these oncologists said, wow, that would have taken me 3 months to come up with, even if I would have come up with it at all. So once the oncologist receive that curated list from the AI, they take it from there. And again, that's the segue here. We do the same thing with our platform, whether you're creating your own scans from scratch, looking for what you're looking for, or if you're relying on the AI to spit out some statistically probable trades, you're relying on the technology to give you the curated list of ideas. What you do from there is discretionary, and is up to you. So that's the world we live in, and we want to have a machine and a human work together, and we are the machine at Trade Ideas, without a doubt. Kind of a unique format today. I mean, I don't know what really to talk about other than the crazy volatility out there. So we'll spend a little time kind of talking about what's going on and maybe what we could expect and how we can use Trade Ideas to try and make sense of it all. So we'll go through those one by one, but we'll start off with the typical market recap and AI recap. If there's much to talk about, there was no trigger for the trade of the week, but from there, I've got some things that we can talk about that might be extremely relevant to where we are in the markets right now. So let me grab my pen, a sip of water, and tell you basically the markets are a complete broken mess. Those of you that were here last week, remember we talked a lot about markets and stocks that bounce up into the pocket, and where do they have to go? Into the pocket. They usually have nowhere to go but a release back to the downside, and that's exactly what we had since we last spoke. Got a little bit of ahead of ourselves. I wish those buy tags were not in there to show that candle from the spies yesterday, but a really ominous close with a trailing tail behind it yesterday. But today we didn't even technically test yesterday's lows. It was a 5-cent offset from today's lows that didn't quite get to yesterday's lows, and typically in my world, I like to see the algorithms reach their goal and flip the switch. But nonetheless, we went within a nickel of yesterday's lows and then rallied crazily right back up. Very difficult price action, probably some of the most difficult price action I've seen in a while. And it's just going to be a great reminder as to some of the things we might, Andy and I might talk about, and some wisdom we might share here a little later with you guys on how to navigate this stuff and what to expect going forward. So a complete broken mess. What do I expect? I expect that we deserved this bit of a relief rally that came today, and we're bouncing again right up into the pocket. And so what's going to happen when we hit that level? Is it going to be a repeat of what happened up here, which is going to be a definitive indication that the downside momentum may be even stronger than we know? But we won't know until we get there and fight with those levels. Let's look at the NASDAQ and the Qs in terms of where it is in relation to the pocket. NASDAQ bounced into the pocket last week and released back to the downside. Very similar action, but almost even stronger than the S&P for the most part. A much higher close versus yesterday's candle. But that higher close is coming right into the declining 10-period moving average. What's going to happen in the next day or two when the price and that 10-period declining 10-period meet? That's where the rubber is going to meet the road. And I keep saying, is this going to be the pocket 2.0, or is it going to put up a fight and find a way to back through and close? So that's what we're looking for here, to be the first step of the stabilization of the incredible volatility we have. In my world, I want to see some price action, and it looks like it could happen in the Qs before it happens in the SPYs. Come up and challenge this 10-period moving average again and put a battle on. That'll be our battlefront. And if we could wage a war for a few days and grind and hold a bid, and the bidders stay in there and pop above and close above maybe a flattening 10-period moving average by that time, that's going to be the first inning or the first battle that needs to be won to try and stave off this volatility. I mean, we have a completely different market here than we did in 30, 45 days ago. And Andy and I have laughed about this in the past. This type of market action right here is that old board game. If you're over 45, you remember a board game called Chutes and Ladders. Nothing but slides and ladders, climbing back up, and big long chutes taking you back down. Well, that's what happens when the market goes into full-on, full tilt volatility mode. It no longer resembles anything that we had back here of nice semblance and narrow range days and bouncing off moving averages. It becomes an absolute free-for-all. And the people that are wildly bullish are met with just the same amount of people who are wildly bearish. And some of your biggest intraday moves, like we just saw today, and we saw a couple of days back, back here, 1,000 point, 1,200 point bounces in the Dow. Those are the only kind of daily moves you're going to see. Let's put it this way, the only time you're going to see those types of percentage intraday moves are in a market volatile like this. And it's not always great. I mean, if you're a fast moving day trader and you are on the ball and you're moving, you're loving this. But if you're a swing trader like we are, basically had to step aside. Remember, just 2.5 weeks ago or whatever it was, the trade of the week was to go to cash because we saw some things we didn't like. And boy, was that a really wonderful omen to at least put out there. Not an omen, but a prediction or some a seed is what I'm looking at, a seed that was planted. And in our little fund that we're trading, the four of us here, that's all swing trading, we backed away hard and haven't done much at all. There was a couple of nice downside VIX movements in the VIX that gave us a nice padding to the downside. But where I'm getting at is if you're a swing trader here, there's really not a whole lot to do. But if you insist on doing something, I suppose we can talk about that coming up here as to how to navigate these markets if you intend on navigating these markets. The Dow, same kind of a thing. It's got a date with this declining 10 period. So all the charts are the same, and we can even go through a bunch of daily intraday, a bunch of daily individual stock charts, and they're all going to look the same. Everything's broken. Everything's bouncing back up on a big reversal today, and we've got this ominous cloud heading right above us here. The old declining 10 period moving average. So what's going to happen when we get there? And then the IWM, as we talked about ad nauseum, couldn't even clear yesterday's highs, did take out yesterday's lows by a lot. Still a ton of space between here and the 10 period moving average. This is our weak link. So the NASDAQ and the Qs had the strongest bounce. They're looking like the strongest sector with the technology in there. But my thesis earlier this year or the fourth quarter just never panned out, that the market's going to do one of two things. It's going to drag the IWM higher, the Russell 2000 small caps, and money managers are going to find their way into that and jump into it, but that never happened. What happened was that the market couldn't go anywhere and it fell out of bed, and then that's when the Russell 2000 IWM small caps, basically, and their true colors here are weaknesses in the IWM. Treasuries is where all of the money has gone to. However, it has given a hell of a lot of it back. Absolute just crazy moves in the market out there. And oil, of course, certainly didn't hurt either yesterday with the commodity way down. It looks like I froze up there for a minute. So that's really all I have on the market recap. It's a crazy market recap, but it's our market recap, and it's what we got to deal with. So did you want to add anything, Andy?
No, I agree with everything you said, Steve. It is just a sloping moving average, and of course now you got the 20 diving below the 50, and
In this.
yeah, and in this crazy, you just the trend is obviously hard downward, and even though we had a nice little day today, I think it remains to be seen, in the coming days what happens. But what happens with that fast line coming down could meet it tomorrow, so we'll see.
Yeah, it's gonna, like I said, it's gonna be a few days. It's not gonna be resolved in a moment. It's gonna be resolved over a few days. We'll see what happens when the price action does in fact meet. Oops. That you taking?
Oh, I'm sorry. I was already taking it from you.
Good. I was like, oh shoot! I hope we didn't lose the. I hope we didn't just close the webinar down. But yeah, go ahead, Andy, and talk about what you want to talk about.
No. Well, no. And we're going to talk more about the Holly channels, and you see that the winning segments all finished in aggressive mode as the most profitable. Have the conservative here, moderate here, and here is the aggressive. Well, this is because of the volatility we're seeing, and you can see in several cases a great example. This AYTU this morning opened up. We got the trigger from Holly, and of course it falls right down below the stop line, traded down there for about below, well over a couple of hours, and then finally, took off. So if you're trading Holly, this may be got stopped out. Look at the chart over here. Beautiful looking daily chart. I've got above a multi-day high here, unlike many stocks in the market. But once again, the volatility got a hold of it, ripped it back down below the stop, only to bounce back up and move higher throughout the day. So, if you are trading the AI, you might, you might pull back and maybe try to let these things set up. It's tough. And no matter what strategy you're using in this marketplace, it's very, very difficult. And of course you can see it by all the stop outs. It would not be fair to judge when you see this kind of action. I will say a really good trade today. If you like bottom picking and reversals. You can see this saver has been just getting destroyed for basically about 2 weeks. And then we had a bar reversal today. Holly pegged it really nice, really nice. So you got a 30-minute just incredible move all the way from 9.58 to almost $1 there on a $9 stock, which is about a 10% move or more. And then it, look at that, came all the way back down to the entry and then bounced again and closed back above at high today. So that's the kind of thing we're experiencing. So just be careful, no matter what you're trading. I'm not going to go over a lot of trades today because it's a mess. It's a mess out there, and it's not fair for me to say, well, you should have just traded all of these trades and just never stopped out. No, you'll never hear me doing that because I think it's very wise to adhere to stop losses. And I usually do not talk about aggressive. The only reason I wanted to pull this up just to show you that a lot of these trades were the right idea. It's just that the volatility got a hold of them, and you can see all the stop hits. So it's tough out there. I'm not going to pound the table on Holly in a market like this. Yesterday was a beautiful day. I only had 2 trades, and one of them was just a banner trade. Oh, do you remember that, Steve? Oh, AIM high.
It gave a lot back today.
Probably. Yeah, look at that. Gave it a lot back today.
Mm-hmm.
Yeah, that's so typical of this market. But yesterday was a very nice trade. I wrote an email about it and sent it out. But all right, guys. Steve, I'm going to send it back to you unless we have any questions out there.
Good. Somebody was noticing. Somebody was noticing the jam down buy on my screen. The last one that came through was Etsy, and I thought, oh, maybe that's a coronavirus play. People sitting at home doing macrame. Nonetheless, make a mental note of that. Week was also something that was holding up well. If I zoom back here 2 days, the email that the market's going to Etsy kind of caught my eye as well. Stocks, and it's the same principle, looking for stock. And what's the score on Etsy? Not bad, 81. But ZM, again, the idea being we don't know how this market's going to open. If it does open and move higher, if the market did in fact get squirrely on us again.
Sure.
So trade of the week is out of the way there. The new feature coming, all right? So if you're not aware, it's not out yet, but when the new version comes out, we'll call it the new beta version comes out, there's going to be a new tab on the single stock window called Similar. Now, when Andy and I first started trading, one of the most simple, easiest ways to trade was, let's trade sympathy. Oh my God, the refiners are running today. This refiner just had great news. What are the other refiners? And how do you scramble around and find the other refiners without really knowing where to go and having a list or a cheat sheet or having 10,000 hours where it just pops and rattles off the top of your head? Well, we now have a tab that will do that. Let's take an example of, I don't want to get ahead of myself because I'm going to talk about coming up here what's going to happen next for the market. What I'm going to be watching for next is what sectors are going to start to show themselves. What next level dive from the 40,000 view are we going to dive down to and start to see? Is it financials? Is it going to be energy? Is it going to be solar? I mean, what's it going to be? But from that point, we can use this Similar tab to drill down an even third layer and find out who those players are. So let's assume for a second that maybe gold gets strong again. Newmont, big wick close, big reversal. I mean, maybe Newmont's going to get strong. All of a sudden, before you know it, CNBC is going to be talking about gold miner this, gold miner that. Well, all you have to do, and when the new version comes out, again, I'm not trying to tease you, but when the new version comes out, bring up Newmont mining. There it is. Obviously, there's our detail. There's the news with Newmont. Here's the profile of what they do, and here's the insiders. But the newest of the new is Similar. And from here, it might be, maybe it's sorted on symbol or price, but you can see this is just like a top list window. We can sort these. And what I recommend doing is just sorting by revenue per year. And that brings my Newmont at the top. So this is the 600-pound gorilla of gold miners. But what you've got now is a really nice curated list, man and machine, of what to do next. And maybe look at a couple other charts and say, oh, this Newmont is really fascinating today. Let's take a look. What's this chart look like? Geologist, same thing. So again, the reason I said sort by revenue up the year here is we get down here to the bottom, you're going to get some goofy looking charts that don't really have a lot to them. So There's no column in here that you can configure. If we go to configure, you're going to configure the whole window itself. So I just noticed that we have revenues, and this is probably the best place to start stocks that have revenues in the billions, and then go ahead and move on down. So the point here, KJC, here's another well-known chart, gold miner names. So if I forget some gold miner names, I can now come here. Oh yeah, AEY, I forgot about them. You know, the same could be said for instance, silver. You know, everybody knows pause silver. They were having a pretty good move early on, but now we can find some other silver names that maybe we were not fully aware of. So that's soon to come. For instance, today, I'm going to come to this one in a second. X steel. Well, steel is an interesting sector in itself, and so Nucor is one that's on there, and you can see they've all had a pretty rough downtrend, but they're trying to do something just like every other stinking chart out there. So I wanted to just remind you guys, and we'll kind of work backwards here, that as the market starts to settle down, hopefully soon, and the smoke and dust starts to settle, we can start to focus on a top-down approach. Is the bleeding stopped? Yes, check. Okay, what are the strong sectors? Okay, we can identify those, and then knowing the big names in those sectors, just type that in and bring it into the similar group and sort by revenue, and you'll have a list of other ideas that might meet your fancy, might meet your eye that you're looking for, meet the criteria that you're looking for another possible trade. So that's the new feature coming. Keep an eye out for. Hopefully in the next week, it'll be in the next beta release. It's called the Similar tab. Now today I'm going to do some, we're going to talk about how not to trade in this volatility. I could easily say, hey, how to trade this volatility and look at all that, but I'm going to show you today how I just absolutely butchered a live trade in something that I was trying to. And he's chuckling over there. I know exactly what he's doing. He's chuckling. He knows I'm going to go there because I'm going to show you how bad I screwed this up. And the point is, it's not that how bad I screwed it up, but the point is how easy it is you can screw this up in this type of market volatility. So let's walk you through the anatomy of trying to pick a bottom in a nice generational low in X steel. I've been talking about it. Matter of fact, yesterday in Sean's webinar, he said, hey, if anybody had any, gift basket buys out there, what are you looking at these levels? And I said, well, I think X might be maybe ready for a turn. We could scroll back and we could see that it actually dipped under $6 way back here. And so yesterday, let's go into the intraday mode. Yesterday, I initiated very first, after it dipped down right here, here's your $6 level, I initiated number one. We'll just call that buy purchase number one. So what I'm trying to do is I'm trying to ease into this trade. And so that was like a 1/3 position. Okay. And then I saw the market hold here at this level intraday and start to move higher. I said, okay, I want to get more of this. And I got probably almost a full position. And in hindsight, what I'm going to say is it should have been a full position, because one of the things we're going to talk about here in a volatile market such as this is you need to downsize your share position. And I talked about it, and I didn't do it today. And I'm going to show you how it squeezed me out. It was just a ridiculous comedy of errors on my part. So there's yesterday a full position, almost a full position. We'll call it maybe 80%, because in the back of my mind, I thought I'd like to add to this, because if this thing does put in that low yesterday, boy, I want to be a part of it. And again, this is what I was thinking when the market had a nice little tail and had a nice little downside, but it didn't close like that. It just drifted off horribly into the close. And I thought, okay, well, my stop will be pretty much down here just below that low. We'll call it that based on my, average position roughly here. So along comes today, and we come with the big gap up, and I got caught in the rookie mentality, which is, oh boy, here's the gap up. And in my mind, I wanted to go to a full position, because if I could do that, then I could have a really nice ego-driven position that I started down here at 6 and maybe really let this ride. And most importantly, as it comes into the pocket here, which I know it's going to come into, it gives me a lot of staying power to be able to possibly have a position with that much profit in it, and I can let this, meander around. So getting ahead of myself during the trade, I'm thinking about, the chess moves down the road. Well, the fatal mistake that I made today was on the gap open. I thought, okay, if this thing gaps up, and we've seen a lot of pro gaps. I've talked about the pro gap where it got after a minor downtrend, the price reverses direction on a gap and doesn't look back. And in my mind, I had talked myself into, that's exactly what X is going to do. Well, I had a bias because I was talking my book to myself. I was already long 80% of the X position that I wanted. But as soon as I saw that little green candle right there start to pop its head up above yesterday, I said, get me in full position. So I bought at the worst time of the day and added to my position, which did nothing but dilute and raise my average price. Actually, it was around 629. Call it right about in here. When my original position was down here, now I've got a full weight. And so let's do this by the numbers. I've got a full weight and I'm watching the market open and start to drift back down. And immediately I thought, okay, I had a binary decision here. I could have waited and for better prices, but what happened was, I'll be the first to admit, I got caught up in FOMO, the fear of missing out. I wanted my full position and I got faked out. And I've even said it before, and I try not to make big decisions or decisions in the first 15 minutes. Well, I did it. And it cost me, because how it cost me is it just bled right back down to negative on the trade. The trade started to work again. I got a little excited, like, okay, maybe I got it. I just had to sit through a little bit of sweat. And then no, it started heading lower. And I said, you know what? I'll be down if I'm gonna let this thing take out 6 again. You guys got me. I'm out. I'm done. Pain, uncle. And why was it pain, uncle there? Because in a volatile market, this thing's going back and forth, down 2%, up 8%. And you can't be playing regular size, and it got me. And of course, the golfing gods and the trading gods, they laugh at me as the price moves on for the rest of the day. And that probably will be the low that I wanted to buy and I was waiting for. But the lesson learned here is I got into too much size in a market that had too much volatility. And I made a trading decision too early in the day without letting the price action kind of open up. But all things aside, guys, this is nasty as hell. I'm telling you, that is just as nasty as hell. Peak above yesterday's high, go down there. It almost looked like you're going to take out yesterday's lows. You took out yesterday's closing price and then rip. That's a tough one. And I don't know too many people who can sit there and in hindsight say, oh yeah, I navigated that perfectly. So I wanted to illustrate the anatomy of how a bad trade can go quickly against you, because I didn't give myself enough staying power. Had I just stayed in my initial thing and just not even messed with trying to jump in a third lot and get loaded on this thing because I thought I was going to be right, that screwed me up right there. It screwed up the whole trade because I just couldn't stay in it. It wasn't a big loss, but it was my typical risk reward. I wasn't going to go beyond one risk. And so I did it to myself. So that kind of dovetails is what I was going to say into how to not play this type of volatility. Me and X today. Don't get into too much size, the size that you would normally get into. Try not to make decisions that are serious decisions in the first 15 minutes of the day. You've got to give yourself a lot of elbow room, because exactly that's what happened. Market threw a big old elbow at me and basically got me out and then laughed at me on the way for the rest of the day. And it's not the last time it's happened. It's not the first time it's happened. It probably won't be the last time. So, I think sometimes the value in showing shitty trades that don't work out well are much more well received in the audience than pounding your chest, hey, look what I did today type trades. We've never tried to do that. Andy and I have been around for a while, and that doesn't really go over very well. So that is that. Since we're still on the topic, Andy, do you have any of your pearls of wisdom you want to add to the how to trade this type of market, knowing that we're kind of pretty much sitting on our hands in the other account? But
No, well, you're exactly right. Well, one thing I like to do in this kind of market is just pick stuff off. I look for levels. If you want to pull up Zillow today, that's the one trade I made. Now I scalped it out, and because like you, I thought the market was going to roll over, but I was watching it, and when I see like an average, like that 200-day moving average down there, I knew the stock was on a mission this morning, because it was down. This is when the market was basically flat. This thing was down like 7.5% or something like that. And I'm thinking, you know what? This is on a mission to go down there and shake the tree below that 200. So I was watching it there, and I started nibbling it at 200. Had a beautiful entry, and then of course I got that big first green bar there on the 15-minute chart. I guess it'd be the second one then, Steve. They got the bar reversal, and then and I scalped out half there, and I was telling myself I wanted to hold the other half, but you see in midday there where it kind of broke the fast line, and I drew a line right at that fast line and got out, and then just very similar to your X, I mean, it was a winning trade, and that's kind of what I've been telling myself. I'm just going to pick stuff off, and but in hindsight, I wish I would. Hindsight's, yeah, it's easy to say after you look at what the market did at the end of the day, but that's one that wish I could have held on to the other half, but that's okay. Who knows? You know, we could wake up to the morning to another 5% gap down. I'm not going to kick myself for picking things up in this market. Yeah.
No, indeed, you are correct. So let me just reshape my charts here. And I guess what we'll finish up with here is we'll just take a quick sector glance because, I mean, sometimes I like to look around and say, hey, let's see if we can find some setups and set some alerts and do that. No, man, there's nothing there. I'm not even going to try and force it. All the charts look the same. And as I go through here in a second, as I go through the sectors, you'll see the same thing. All the sectors look the same. I mean, all we can really do is say, okay, here's the NASDAQ, here's the big bounce today versus the IWM Russell 2000. Okay, tale of two different bounce volume, vigorous bounces. That's really all we're going to see. But my point is, going forward, what we're going to be watching, at least I'm going to be watching, is step one is what's going to happen when we get back to our pocket level of declining moving averages. It's coming. I'm pretty sure that's going to be a foregone conclusion. It's just what markets do. They get ahead of themselves and then they pull back. Just like on the way up, I talked about all of those charts that got way too far ahead of themselves and needed to pull back to their fast line. We're just talking about the exact inverse scenario here, the inverse dynamic. So step one is to get up into the pocket and then hold it there, hang in there and try and push above and push through. And again, the NASDAQ looks like it might have the earliest and best chance to do that. Well, from there, where do we go? That's where I want to come in and take a look at some of these ETFs. So let's just expand these daily charts and just kind of see what's what in relation to where. There's the Dow, there's the brokers, pretty good close in the brokers. Really big shakeout on the home builders. That's interesting. Actually, an outside day in the home builders. They took out the lows and they took out the highs. That's very strong. That could be interesting. With interest rates coming down and refinances, that could be one to watch. So home builder is interesting. I'll go ahead and say that. But as you see here, as we go through, every single chart's going to look the same. They were all knocked down at the pocket. The same thing, same chart, and they're all now bouncing in an oversold condition, trying to figure out what happens next. So we are in basic no man's land here. This is the China ETF. It's kind of compressed. It didn't really sell off as much as the other stuff. That's also a China ETF. Here's the healthcare ETF bouncing back up into its moving averages. But for the most part, everything looks the same. Solars are actually never even broke their 200-day. That's rather interesting. A lot of things out there broke their 200-day moving averages, but the solars did not. Mental note there. IYR definitely broke. Looks like every other chart out there. There's our hideously ugly Russell 2000 small caps. Okay, another interesting one. The biotechs really had a big flush down below the 200 and then reversed. Other than that, just a mess. Pretty much everything is a mess. And like I said earlier, we're not going to sit around and try and pick up some possible chart setups because that would literally be forcing the issue, and we're just not going to force the issue. Gold and silver basically hanging out as well. There's just nothing that looks super interesting. TLT got way ahead of itself. The other thing that really stuck out was the home builders, XHBs, in my opinion, because where'd they go? There we go. Because of that reversal outside day and outside day reversals. They're really enjoying that. Interesting. So they're actually pegging stock anymore? No. What's a good solar stock? I haven't played one in a while.
SEDG.
All right, solar.
Looks very similar. Yeah.
They're also showing that as a semiconductor.
Okay, well.
Most of these solars are going to be semiconductors. Okay, so TSL is an old one, purchased obviously. CSIQ, is that one still around?
Mm-hmm.
They're throwing that one in solars and they're throwing that one in semiconductor as well. Interesting. First Solar, I tried First Solar. Why didn't I see that?
There you go.
First Solar, but yeah, see, they're basically not calling them solars. They're just calling them semiconductors. So
semiconductors, yeah.
Bad example to try and pull into those and say, hey, well, that solar's looking good. But let's go to the XHB. So we'll go to like Lennar and somebody like that. And let's look at that. Lennar is above its 200-day, recovered nicely. And so they're only giving us a few home builders here. CCS, Lennar, big reversal there. That one doesn't look that great. But gosh, the CCS Century Communities, that was a pretty nice long run tail through the 200. Yeah, interesting. So there's a real-time example I was just trying to show you guys for how to do that. What are they calling JKS? They're calling that a semiconductor also. So they're getting lazy. Whoever is compiling this data, they're getting lazy and calling these semiconductors. So if anybody has any questions, now would be a good time, because as I said, there are currently no setups. What to wait for and how to play it. I'm waiting for the pocket to see how that resolves itself. Hopefully we get a close or two below on the daily candles, above the 10-period moving average. And then from there, I'll start to pay attention to the sectors one by one and go from there. But there's no reason to come in and start looking for individual stock names right now. We got to just pull back, go to the 40,000 foot level and reassess, press change and rearrange. All right, explain the repo market. I would not even begin to be able to understand how to explain the repo market. Couldn't do it. Sorry, I'd make a fool of myself even trying. Yeah, it's true. Photocell is, in a sense, a diode or a semiconductor.
A lot of those are exactly what first name E is referring to.
First name E. Everybody's name is first name E today.
Yeah.
All right, guys. Well, I'm going to go ahead and bring Scott back in for any final announcements. I think we've got a St. Patrick's Day promo coming up, but that's all I've got for you today. Take it easy out there. Cut your share size in half. Don't do what I did and get over exuberant on a setup that you think might work, because they're still going to throw an elbow right in your face and remind you that you're not in control. So, all right, Scott, come on in.
Hey, thank you, Steve. Yeah. Just so you know, we have a new ebook out. It's written by our Chief Information Officer, Dave Mabe. You can get it by going to trade-ideas.com/earnings. It's got some great tips in there on how to take advantage of earnings season, some strategies in there also for you to populate into your layouts. It's free, trade-ideas.com/earnings. Just go ahead and grab it. It's good stuff. We've got podcasts that we release periodically. You can find it by searching for Trade Ideas Podcast on whatever app you listen to podcasts in. There was a new short one last week, and we've been having Sean McLaughlin, our Chicago Sean, as a host for the last several ones, and people are really liking those. There's a promo code that's good this month, Springtime. Saves 15% off your first month or year of Trade Ideas. You can also use this to upgrade from standard to premium if you decide you want to do that. I'm not seeing that slide. There we go. Thought it was frozen there. Yep, Springtime, all caps. It is case sensitive. Any questions, shoot them to info@trade-ideas.com. You can follow Steve Gomez on Twitter @TodayTrader. Also have @TradeIdeas. There's a couple other handles out there like @QuantBot. You can follow Steve and probably find those too. Facebook.com/TradeIdeasPro is our Facebook page to like. And as I mentioned, send all your questions to the info@ email address. It goes into our help desk, and you get the correct answer you were looking for in a most timely manner. So we're going to have the recording of this up later on tonight or tomorrow, and send you an email with a link to the recording on YouTube. Thanks, Steve. Thanks, Andy. Thanks, friends.
All right. See you next time, everybody. Friend E.
Thanks, everybody. I'll see you on Thursday.